Well, we might get things underway. Welcome everybody to this webinar today. For those of you who don't know me, my name is Alison Airy and I'm the CEO of ACBC in New South Wales. Also on the line is my colleague Lisa Goodhand, who's joined us as our marketing and membership manager. So we're really pleased that you've been able to join us for this webinar, which is the fourth in a series that we're doing with Global New South Wales to really help exporters from New South Wales develop digital skills to market their products and services into the China market at a particular time in history when physical travel isn't possible. Before I proceed, I'd just like to make a bit of a few technical announcements. If we could just go to the next slide. Many of you are familiar with one more slide with Zoom by now, but what we will be doing is we'll be taking questions and answers at the end of the presentation. But if you do have questions that you think of, please ask them via the Q&A function, which is shown on the screen. There's also a chat function which people should feel free to use. People have already started doing that to just introduce yourself and your company to the rest of the group. But before going any further, I have great pleasure in introducing our partners for this webinar series, the New South Wales Government, specifically Global New South Wales. And we have with us Honor McLennan, who is the Assistant Director of the China team in the New South Wales Treasury. And we're really delighted that Honor will be able to talk today about an exciting new program that the New South Wales has just announced to help New South Wales exporters trying to get into the China market. So, Honor, I'll hand over to you for a few comments.
Thank you so much, Alison, and thank you to ACBC New South Wales for hosting this webinar and the series. It's been a really useful series so far, and we know that there will be lots of insights coming out of today's session. The New South Wales Government and ACBC have a long history of working together to assist exporters and promoting goodwill between Australia and China. And that's part of what this series is about. But also, to Alison's point, to assist businesses to prepare for what is already a complex market, but to prepare for an increasingly online trade promotional engagement. New South Wales and China have a very strong trading history. Actually, last year in 2019, it reached its peak at 46.4 billion, and we hope to see that long continue. And that's why we are so committed to making sure that New South Wales businesses can navigate a complex but a very highly rewarding market. To Alison's point, Global New South Wales is a government-wide strategy designed to place New South Wales as Australia's centre of excellence on the world stage by highlighting that we are a connected, smart and vibrant state. And that strategy was launched at the end of last year, but as part of our response both to the coronavirus crisis and also to the need for export support, we've launched a number of key initiatives to continue to support exporters to navigate trade and investment globally. And as part of this strategy, most recently, the New South Wales Deputy Premier launched the New South Wales Government's $12 million Going Global package, which includes a Going Global program to support exporters to enter key markets, including China. Two of these programs in particular are focused on China. One around food and beverage, which I'm sure will be very interesting to many of the participants today, and another around health and medical technology. Now, these programs are a competitive program, but it is designed to provide export coaching, networking and in-market assistance for exporters who are export capable or export ready. So have your export plan in place, and to connect New South Wales exporters with opportunities in key global markets, and to help companies diversify or re-enter existing markets. So to summarise, essentially it is a up to 9-month long program of key priority markets, including China, where we'll provide pretty detailed export support, business matching, advice around designing your business plan, connect you in with facilitators and legal providers, IP providers, etc., so that you can build your market plan with confidence. Expressions of interest for this program are open, and they will close on the 8th of September. So please get your skates on. As I said, it is a competitive process. We're looking to have 10 to 12 companies per program. So that's 10 for food and beverage and around 10 to 12 for health and medical technology. And the reason that we're doing it is because it is an intensive program. We want commitment from the companies to participate, but also we want to be able to provide a deeper level of service and support than we may have been able to if it was many, many more companies. So it is quite an involved program. To find out more about the program, the New South Wales Going Global program, please visit global.newsouthwales.gov.au, and we'll share that link after this. I highly encourage you to apply and benefit from this great program. It is a free program, and it is an opportunity to make sure your business is ready to go global, to stay global, and to grow in a period of challenge. So thanks for that. Back to you, Alison.
Well, thank you very much, Honor, for those remarks. And it really is wonderful that the New South Wales Government is investing in this program, which it clearly sees as a way of helping get the New South Wales economy back up and running after this difficult period. And of course, China is a great market because it's already starting to fire on all cylinders. And I think we'll hear more about that from Ryan. So congratulations, Honor, to New South Wales Treasury and your team for all the hard work going into this program. We will be sending around details about the program when we contact you after this seminar. So if this sounds like something you would like to be involved in and you're qualified for please do put your hand up because it's a fantastic opportunity. So now I have really great pleasure in introducing our speaker, Ryan Malloy of Redfern Digital, to give the presentation. We're really pleased that Redfern's able to collaborate with us on this webinar because they are there on the ground in China. They're normally based in Shanghai, but Ryan's actually joining us from Beijing. A terrific firm who really understand the very complex digital landscape that operates in China and has really put runs on the board for its clients, growing along some of them who have become some of the most successful brands in the market. So really have some terrific insights to offer. Ryan is the CEO of Redfern Digital, and he's been living in China for 17 years, and 10 of those have been in the area of marketing. So Ryan, I'll hand the floor over to you. As mentioned earlier, please, if you have questions, put them down in the Q&A section. Ryan.
Brilliant. Thank you very much, Alison, and thank you to ACBC for having me here today again. So I think it's the second time that we've done this. It's always a pleasure. So I'm currently in Beijing. We've been doing a bit of a tour of the country. We were in Shenzhen the week before. It's great to see that business has bounced back in the market up here, especially in tier 1 cities. So a lot of our clients we've been saying to try and push as much product, the likes of Beijing, Shanghai, and Shenzhen, because it's very much back to normal. All of the offline stores are even open, whereas some of the smaller cities we've been touring have still had a little bit of a difficult time, I think, bouncing back, especially in offline retail. But today we're going to talk about online, which we've been a huge advocate of prior to COVID. The digitalization in China has continued to accelerate. Post-COVID, we're seeing sales still increase month on month for a number of categories. So I think this topic is really important for exporters to China, for SMEs, for large companies, all shapes and sizes that are looking at potentially selling into the market as a great starting point. So just to give a a bit of a background on Redfern Digital. We're a full service agency, so the advice that we provide, we do mini programs, we help stores, we help brands in terms of connecting them with distributors for offline and do their media. We run Tmall, JD, Kaola, all types of different e-commerce stores as well. So the advice that we give really allows us to be quite neutral in that as an agency, we don't do one particular thing and say, this is the way that you should go. We pretty much look at your business, then we can help you in terms of understanding, okay, this is the best fit for your China entry. The one thing that we always see in common, irrelevant of the category, is the importance of online. And we have worked with brands that have taken an offline distribution stance first, struggled with rotation rates, and then later actually, had to leave the market. So the importance of having your stores set up and for Chinese consumers to have that ability to see you online is extremely important. In terms of the changes, I guess, not much has changed. We've seen certain things around functional foods, nutritional health increase with regards to immunity or with regards to things related to health. I think generally globally there's been an increased interest in any type of product that's good for you or helps your immune system, and that's been the same in China. We've seen an increase in anything that's related to safety or ingredients, just like when we had the infant milk scandal 10 years ago. I remember we were going through that and we saw infant milk formula prices go through the roof as the demand for foreign products increased. We're seeing that in the mother and baby categories especially. So we work a lot in the mother and baby category, and not just in infant milk formula, but also in prepared food, diapers, toys. Brands have been increasing their prices. They've struggled with both supply, I think, as a result of COVID, but also with the demand that's coming through some of these categories. So yeah, functional foods, nutritional health, mother and baby, they're all up. And some of the most needed products have relatively stayed the same, though some of these you'll see are quite new. So in terms of entertainment, anything to do with outdoor and fitness has continued to increase. So we thought that we'd see this sudden jump, and then everyone would, realize that, COVID had kind of passed up here, and that they would go back to their old habits of ordering Erlenmeyer or online food and not going out for a run. But it's something that's become habitual. So the categories for apparel we've seen as well, it's a lot more around sneakers, casual wear, sportswear. So Adidas and Nike are having a great time right now in terms of moving product up here. And I think that's something that if your brand is situated in that kind of active wear space, then there's definitely something you should look to link it as much as you can. Fresh food, seafood, fresh milk. We've been talking with a number of exporters in the fruit area, and their business is up. So fruit's doing very, very well. Cosmetics as also the increase in spend has continued to get higher and higher. So these are the kind of the main categories that we always see online. They're continuing to do well. As I've always said in most of my webinars, Tmall does provide monthly sales figures, right? So if you are in a particular category, you can work with an agency. So for example, we do crawl data, so we get historical data, and we can go back over, I think it's about 220 categories now, and help brands understand the changes in terms of sales. But also brands should be aware that if you go onto Tmall and do certain searches, you can find these figures yourself. You can see what your competitors are selling. So I always support brands in saying that, or suggest to brands that they should constantly be looking on Tmall, have a Tmall account, and just look up your category, look at what your competitors are doing, because we're seeing brands growth increase exponentially within a matter of months, right? If they're within these key categories. I think the major thing for all brands is, one, they have to look at a budget that they have when they're coming to market, and two, they want to know a return, and three, they depending on the category, they might have issues with selling into market, whether that be cosmetics and due to animal testing or due to product registrations. Infant formula, for example, is the same. So that restricts them. So then they have to look at a kind of cross-border market entry approach. that would be different to an in-market. So with any type of e-commerce, I think that's the first distinction to bring up in China, right? You have the two options. You have the one option of essentially never actually selling into China, but selling into China is the way I put it, which is the cross-border route of sending your product up into free trade zones or through parcels, depending on if you want to do bonded zone versus parcel delivery. Bonded zone, we always support because of it's lower in terms of the price per package sent up. And in that way, it sits in the free trade zone and is delivered to the customer. Whereas the other model would be you have to have someone in market, which would be a distributor, a trading partner that would then import your product, and they can still help you go online, but you would go through the domestic online channels. It's slightly different. With most brands, if they have a very large budget and their product makes sense, I mean, let's say, for example, UHT milk, right? If we look at a category such as that, then offline makes a lot of sense. The product is fairly inexpensive, and also it's something that people would buy kind of impulse purchase in a convenience store or in particular offline stores, and it's quite expensive to send cross-border. So it would make sense for some categories to actually look at an in-market partner. Further to that note, when looking for an in-market partner, what I have said more and more in the last, say, 6 months than ever before is make sure that that distributor has good online capabilities, because that's another issue that a lot of brands face. They find a distributor, it might be a Cofco, a Synodus, a China State Farms, a very large distributor that, you know, it kind of ticks all the boxes and the job's done, but it's not done. At that point, they will help you list into a number of offline stores, and you will battle out with other brands in the Olays and the city supers and a lot of the premium stores here until they can get proof that the brand is working, and then it can then roll out to more stores regionally. And the best way to do that is e-commerce. So that's something that brands also have to take into account. So when looking at e-commerce, whether it be cross-border or in-market, you've got two major options. Essentially, you can go with the larger platforms, or you can go with the smaller platforms. The smaller platform would be the mini program, the WeChat mini program, or the Little Red Book cross-border store. They have very small startup costs. The mini program, you own your own data, you own your own store, unless you go with the Yozan model, which is a SaaS model that you can also use. You can build your own. Essentially, that's your then private traffic. And a lot of brands have, I think, been coming into the market looking for the mini program solution, but beware that you have no traffic. You're starting from zero if you take this approach. You have to build up your traffic. You have to work with WeChat KOLs. And I think that's the hidden part that agencies don't say. They say, oh, I can build this mini program. It'll cost $5,000 to $10,000. And you can sell to China. But the problem is you're not going to sell anything because no one will know it exists. It's like a website. You then have to invest heavily on SEO and SEM for a website. And the same is with mini programs in China. The other option is going to the larger platforms. Now, the larger platforms have a much higher investment. So the brand should be very clear that their product fits the market. They should be very clear that they're looking at having a long-term strategy in China. And they should be very clear in terms of Daigo. So you'll see in terms of cross-border, Australia has, you know, the largest, if not one of the largest Daigo markets in China in the world. And this is an opportunity for brands to see if their product is already being sold. You can check on Taobao, you can check on WeChat, you can check on Little Red Book. These are the major kind of Daigo channels that you will find being sold into China. And you know, if you happen to see that there's already a market there, then that's great. If not, we often will work with brands to kickstart their China entry through working with the Daigo channels. Now, one note on the Daigo channels is it has consolidated, and essentially it's a very price-driven strategy into China. Before, it used to be around novelty and new products, but people have become accustomed to certain brands for certain categories. So your A2s and your IMF, or your Swiss when it comes to nutritional health, or Blackmores. And so it's all about price right now. So brands have to be aware that it won't be for a profitable sense. It's about trying to build up your story as you move into the China market. And with regards to the platforms, the major thing for all e-commerce platforms that you work with is trying to understand how much investment has to go into the marketing that will grow that platform. Even with the open source platforms such as Tmall and JD, you still need to do banner ads, you still need to work with live streaming, you still need to work with all of the platform's tools to really start to get your sales going, or the monthly fees and working with a TP will just not make it a profitable venture for the brand. So I think that's the most important. And here we've broken it up pretty much into, if you're looking at kind of an SME in-market approach, then you could look at a mini app only focused on paid media instead of running a WeChat account, a Douyin account, a Little Red Book account. We always suggest that you look at just building your brand through working with influencers in the initial stage. Douyin now has a new store, the Luban store as well. So social commerce is really driving. And I think that's one option that is good for brands, but they have to be aware that it isn't a case of setting up a mini program and then away you go. With larger brands that have a large investment, I would suggest to immediately disregard the mini program, because the amount of investment it would take in terms of the return you can get for a larger sum of budget, it just makes it not viable. So for larger brands, I would suggest going to Tmall, JD, and looking at a cross-border approach. And so these are some of the platforms that we have here. Little Red Book is my favorite at the moment, because they've just decreased their commission from a ridiculously high 25% to around 5% for most categories, which is really great for most brands in nutritional health, food, and them spaces. There's talk around town that they will be also lowering it across more categories in coming months. Douyin's usually my favorite, but definitely in the bad books, because they've done exactly the opposite, and they've actually increased their commissions now to be around 20%, which is an interesting move for them. Now, just to be clear on that commission, that's if you're using their video platform to divert traffic to an external source, right? So if you're looking to, for example, link Douyin with the likes of Tmall or JD. With Yodan, this is the quickest, cheapest, and easiest setup. I think when working with agencies, be careful and ask them if they're using Yodan, because if you're paying $20,000, $30,000 to set up a Yodan store, then you're ultimately being ripped off, because a Yodan store is a templated store. You can, I think it's about 7,000 RMB to 12,000 RMB, depending on the different packages you choose. And then you have a monthly ongoing fee that you pay to use this store. So in the long run, it might make sense to set up your own and design it from scratch, because you've got over 5 years, it becomes around the same price. But if you're looking at testing the waters, then Yodan is a really good option. The other thing that's great about Yodan is it does have some natural traffic. It is an open source platform. It is, it can easily connect with in terms of docking, and also it has, it's an application in itself. So people can come across your store without actually knowing your WeChat account. Whereas if you set up your own mini program, it's like setting up your own website. And essentially it is indexed, but it would be on page 205 on Google, right? So that's where you've got to really look at how you can build up the presence. Tmall Global is, and Kaola really kind of lead the way. I'm personally a big fan of Tmall Global because of their in-app capabilities. JD Worldwide and Kaola, although they're developing in-app marketing that helps to drive sales, they're a little bit behind the game. So the sales through these platforms can be lower, although it depends on the category. We're working with a mother and baby, it's not appliances, like accessories brand, where we actually in the end decided that JD Worldwide would be a best fit, because we looked at our data and we realized for this category it sells particularly well on JD Worldwide. So when choosing your platform, you need to understand, okay, what's my category? Which one sells well on which platform? Again, this data is relatively accessible nowadays. And then you need to look at, okay, in terms of the investment, what can I get? And when working with TPs, most of these platforms now have a share, they have a POP model. So basically you rent out a shop and then you need a TP to essentially run that store for you. you need to be clear with them, okay, is this the best platform I can be working on, and what are the returns I can get for the amount of investment in-app? It is quite simple to set up a store on these platforms, but getting sales is a different spend. So I think that's really the thing to focus on. And for those brands looking at also having product in market, Homa is a great option. So we were doing tests a month, I think it was now about 6 weeks ago, where we went around a number of cities. We went down to tier 4 cities that, you know, Homa has a great penetration, especially in Eastern China, and they were the only stores that seemed to be constantly full. So I think for brands that are looking to work with Homa, that's really kind of the one that you have to get, you know, contracted with if you're looking at offline in China. And they do have their app as well. We've had more and more brands be rejected by Homa just because it's becoming increasingly difficult to work with this platform. Everyone wants to work with them. So my suggestion is that you need to work with an agency to understand what they want to see. The majority of sales with Homa, to some extent in the larger cities, still comes through the app. So they look for a lot of in-app marketing in their own platform. If you just turn up and say, this is our product, it's a great product, can you please list it? They're going to say no. So you've got to look at, okay, what investment can we make together with the platform that can help us have a better chance of being listed? And then finally, there's the WeChat mini program. And so with the WeChat mini program, that's very much, as I mentioned before, your own platform. You have to build it from scratch. And it's within the WeChat ecosystem. So any type of media you do, you need to work within WeChat with WeChat KOLs.
Just to cut in there, Ryan, for a second, we've had a viewer asking about what TP is. TP is just a third-party provider, so any of these platforms that you've got listed, is that right?
It is, yes. So there's e-commerce partners that essentially help you run your store, and they'll help you do your in-app marketing. So Redfin Digital help with this service. There's a number of different ones at Alibaba. If you're working with them directly, they will introduce you to, basically they run their store, they'll help you with marketing, and they'll give you suggestions on your gross merchandise value that you can get from these platforms.
And Ryan, you also mentioned that there was quite a lot of information available and data about these programs, and that they were quite easy to set up on. Is that still the case if you don't have Chinese language capability? Can you do all this sort of stuff in English?
Not all of the platforms, but with Tmall Global, they have BDMs that work internationally. So each country will have Alibaba representatives that you can work with. You will need to have Chinese capabilities for the running of the store. This is something that they can assist you with, right? So you can reach out to the agency, and they then will together work with Alibaba to get you listed on the store, or you can go to Alibaba and they will put you in touch with an agency. So essentially, to run your store online, you will either need to hire in-house Chinese staff who can do your customer service. Customer service is a huge thing in China with all of these platforms. And that's the other thing as well when it comes to the mini program. Although the setup cost is quite small, the volume isn't necessarily as high, but you need someone always there to deal with it, right? You need to have some type of staff or some type of resource that is constantly dealing with Chinese customer service, because it's a 24-hour cycle with most of these platforms. So I think there's two options. Either you go to Alibaba, who will then put you in touch with an agency, or you go to an agency, or the third one would be that you hire your own Chinese staff. You can run your own store without working with an agency, but that's also, you need to make sure you hire someone who has the capability, because if the store starts to do things that are not in line with Alibaba's code of conduct, you will have your store removed.
Okay. All right, lots to take in.
Yeah, so with WeChat, this is, as I mentioned, the kind of dipping the toe in the water if the brand's looking at a smaller budget and they're trying to look at the market. WeChat, in terms of the CPM, so the cost per impression, I think it's the most expensive in the world. But in terms of sale conversion, we still find it to be quite strong compared to other platforms. And that's a great thing for the mini program, because essentially what you you need to do to set up a mini program is you need to have a WeChat account you will then establish that mini program with, connected with, and then you will push out content for the people, the followers, right? So really the mini program sits within the WeChat account. So you still have to go through the process of setting up that account. You can set up international accounts. You can establish cross-border mini programs if you're looking at selling cross-border. Do look into the costs of individual parcel delivery. It can be quite expensive. So we've seen that with most brands, they'll have a certain price of 80 RMB for their product, but then they've got a 50 RMB delivery fee, and automatically that puts off most Chinese consumers. So that's another thing as well that you need to either build into your cost, or you need to make it look more attractive in some way for people buying through the mini program. But again, very accessible, Yodan store. You'll need an agency or some in-house support to set it up in terms of the design and unlock some of the features such as membership. The most successful mini programs that I've seen in China through e-commerce have membership programs. Actually, across all platforms, we see that membership programs are the most important in China in terms of trying to build loyalty towards your store. And so brands should really look at making sure that one is put in place so that people remember to come back. You can put in mechanisms where, for example, someone buys a product and they get a 10 RMB voucher that they can send to a friend. That's another great thing. You can do much more customization within the mini program as well. And you have a lot of CRM kind of features that you can build in. So I think that's really the major parts for setting up an account. And all of this can be done in around a month. So setting up a WeChat account, international, and so the terminology has to be correct, because we've had brands that set up an international WeChat account. International WeChat accounts cannot face China. So you're setting up a WeChat account to sell to Australia, which just doesn't really work. So you need to set up an international China-facing WeChat account. So that's the most important thing, and it needs to be verified as well in order for you to go through the process of being a verified account, and then later for you to set up your mini program, which will also need to be verified as well. You don't need to have an entity in China to set up a cross-border mini program or to set up a international China-facing account. But if you're in market, you can also set up one that is under an entity here. So you have them two options. It's quite flexible. The big thing around costs is I think everyone sees the costs on Tmall Global and go, oh, I've never really looked to work with that platform. Also, JD Worldwide is quite a lot of money. These are refundable deposits. They don't act as a scam, these platforms. They always return them. We've never had a case where it hasn't been returned to the client. They very much are, originally were put in place actually for IP infringement. So if you were setting up fake products on Taobao and you got caught, they would then, the punishment would be that you'd lose your deposit, right? So I don't think that's really a threat for many foreign brands. Or if you start putting toxic ingredients in your infant milk formula, then you'll have it removed. But I mean, there's much more serious consequences of doing things like that than losing a deposit on Tmall. So I think when looking at these costs, it's important to understand that there's a lot of other costs involved. You have your TP costs, so finding a good TP that will either try and do more of a commission model with you and a lower ongoing service retainer. And then, as I mentioned before, the in-app marketing. So in-app marketing, basically, your TP, irrelevant of the platform. With Xiaohongshu, with Little Red Book, it's a little bit harder because they don't have indexes. But with the other platforms, they can tell you, okay, if you give $1, then I can give you, say, $5 or $6 in return in terms of gross merchandise value. All of the TPs, so the Tmall or JD partners, they can all help provide you with this amount. So I think a lot of brands look at the deposit and it scares them off, but this is something you will get back. It's really going into detail to understand what are the other costs involved. And the final thing as well around that is discounting, right? So we'll look at working with a particular brand, and for every brand, it's, is this a profitable venture for me? Does it make sense? And the whole story of, I think everyone shouts from the rooftops that China is a premium market. And so I can double the rate of my products. And that will help you with the grey channel and the Daigou, because then it makes it a very profitable venture for Daigous to buy your products in Australia and then sell them through their own routes into market if you double your price in the China market, right? Because there's a huge margin for them. So your sales in Australia will go up if you look at that approach. The problem is, although it is a premium market, and for IMF it's one, you know, some of the prices that we see, it's one of the highest in the world, but it's also a discount market. So it's a question of, okay, this is where my product is selling at, but I'm saving this much, right? So we even see at 11.11, people trade up to higher, more luxury products within a category, foreign products they wouldn't usually buy. You know, instead of getting the cheaper domestic version of a vacuum, they get a Dyson, right? Which is kind of the thing they've been waiting all year to get. And 11.11 is the time when the shopping list comes out and people purchase these higher priced items, because a lot of the Chinese consumers' mindset is, well, it costs 4,000, it's 50% off, I'm saving 2,000, rather than it costs 2,000, 50% off, I'm saving 1,000. And that's very much what we see. So brands, when they're setting up their e-commerce stores, really need to also take into account that you will be discounting heavily. We see brands that, for example, are doing live streaming. So we pulled data on a honey brand the other month from New Zealand that did live streaming with Weya, which is one of the largest live streamers in China, apart from Li Jiaqi. And with Via, she focuses more on food and beverage. And I think it was around 60% of their annual sales came through one live streaming discount purchase. 60% of everything they do every single month was sold within a few minutes. And so that's something as well with 11.11. A lot of brands, they will go to 11.11, they have to discount, and they'll push most of their product through on a discount. So when you're pricing, I always say, yes, price high, but look at your average sale price. This is something that we also need to take into account. The ATV and how much that would be times the volume, and to make sure that it's a profitable venture. The other thing is membership. The amount of times that I've seen Tmall stores without membership programs put in place, without follower options, without campaigns that try and get people to follow their stores, is shocking. And if you're going to work with large live streamers, you're not necessarily going to make profit from it. You're going to get a huge amount of volume. You're going to push. So in terms of ROI, it is good, but you know, is it profitable? You still have to give a commission, then you still have to, for example, provide a discount. But the point is that you capture these thousands of people that are buying your product in your membership system, so later on you can resell to them and retarget them. You know that they're the type of people that will buy your product. So I think that's also important to ensure with discounts and promotion and marketing strategy that you have this cycle in place.
So Ryan, if you were, you know, you've really emphasised the importance of pricing strategy. Is it credible to charge a price which is, say, double what you would sell in Australia? Is that something that would be accepted in the market in China, even if you were frequently offering discounts on that high price?
If you're frequently offering discounts, then it works. We've seen that strategy work. Would I double the price? I don't know. But Chinese consumers, they understand that there are additional costs for exporting products. So they understand that this price will go up. And they're not necessarily aware of how many multiples it will go up by. Now, if it goes up to a ridiculous point, the issue you get is the Daigou become very interested, because they can essentially send the product through parcel and get it to a consumer cheaper than your Tmall price. So you probably will find that you're not selling very much on Tmall or JD, but you'll suddenly have all of your offline stores increasing. But we always say that bring up your price by around 50%. And that would be including all of the extra costs that you have, but then discount as much as you can, push promotions through, especially in the first year, because you don't want to come over as a kind of cheap, you know, not premium brand. That's something that you don't want to come across as. But on Tmall, it always has the original price, line through, and discount price. So people see where you actually stand as a brand, right? But they're interested in buying it for the first time because it might come across as being, it's a discount. So it's a money saver. It's something that will help drive purchase. Yeah. And yeah. So and it is good for brands to do that. The other thing is we were meeting with a brand the other day, and we're still in discussion of whether we want to work with them, because another issue that they have is they have quite a large budget for e-commerce, but building brand loyalty outside of e-commerce, because you have to think, if you're doing e-commerce in-app marketing, your sales will go up suddenly, right? But they go up suddenly with the discount price, and they drop back down, because you don't necessarily have brand loyalty. People, they go into Tmall, they see a particular link, 30% off. Ooh, that looks interesting. I need some honey, or I need this particular nutritional health product or food. Click on it, they buy it. They probably don't even read what the brand is. They might do a little bit of scrolling, but they'll find, oh, it's from Australia, looks good, done, bought. But will they come back and buy it? That's the really big question. So making sure that you put in different tactics like these for repeat purchase is really important. We do a lot of branding in terms of the out-of-app media, so making sure that Chinese consumers have more touch points. They say an average is 7 to 8 touch points that a consumer has before they make their first initial purchase. Now, the promotional discount just speeds it up. People will buy it before they've had 8 touch points, because they see the brand, they like the brand, and it's on a discount. Other things that you can do is like bundling. So I personally, as a consumer in China, have bought products before. I remember a cider brand, for example, that had 6 different varieties. I tried 2 and thought it was awful, and I ended up going to a party and tried another one of their products, and it really suited me. It wasn't too sweet, it wasn't too sour, and I was like, wow, this is delicious. And now I'm an avid drinker of that particular cider. So I think another thing is bundling as well. Chinese consumers are not going to like all of your products, so if you have a number of different SKUs, try and have packages where you can sell 8 at a time. And it's also great for getting volume up. So you buy 5, get 1 free, something like that. Merchandise and mother and baby. We do a lot in the mother and baby category. Also in alcohol, which is quite contradictory. They're probably our 2 best categories. So with regards to both of them, actually, merchandising is huge, right? So with alcohol, you can't cut your prices too low, or you'll find that your distributor suddenly doesn't like you. You'll find that you're having lots of products bought by bartenders that will then hold on to it when it's been discounted. So what you can do with these products, and with mother and baby as well, mothers are willing to pay a premium for a product. So it's not necessarily the value is how much I save. It's also what am I getting. And so creating that connection with their children through different types of fluffy animals, and with Australia we've done kangaroos and koalas and crocodiles, pretty much the whole range of wildlife I think we've done in terms of merchandise. These are things in ways that you can connect with the children as well. You can do collectible items, things like that. Limited edition is always great, especially around Chinese New Year or any point in the Chinese emotional calendar. If you can try to bundle gift packs, gifting of foreign products, especially in food and beverage, nutritional health is still a huge part of Chinese culture. And then also VIP and loyalty systems where you can keep brands in terms of the ongoing purchasing. So the most common thing that we'll get when we'll go through the prices of Tmall and JD is, well, I'm on Amazon, but with Amazon they don't have all of these different types of in-app advertising options. So you can just see here all of the different ways that every day you can be creating content, working with live streaming, working with different types of in-app promotional banners, SEO to increase your ranking of your product when searched through category. These are all things you can do to increase the sales of your products, and you get excellent data from working with Tmall on these as well. And in terms of the budget, there's 3 major types of sales in China. So you have the first one, which is what I just mentioned before, which is the in-app marketing, which is pretty much you pay into Tmall. In order to do this, you will have to open up your Alipay account if it's for Tmall Global, and basically you then pay the budget into there, and from that it can be spent on these particular types of promotion. If we look at other types of promotion that we help in terms of driving traffic to online stores, and just on a note on that, always drive media to a store. Outside of China, we often will think that comes across that we're trying too hard. Chinese consumers actually see it as a waste of time if you have a particular product being marketed, but then they don't know where to buy it. They don't understand why they're reading the content. So always link to some type of purchase channel. The exception of that is product seeding. So product seeding is on Little Red Book usually. That's the best platform to do it. Little Red Book is 90% female consumers. So when working with this platform, you need to, if you're selling, for example, I don't know, men's razors, that's fine. You can still purchase through this channel, but do understand that it'll be mostly, you can still sell through this channel, but do understand that it'll be mostly women that are buying it for their brothers, husbands, fathers, etc., as gifts, right? Or out of particular necessity. There's only 10% of the users are actually male on that platform. The product seeding is really, really good in terms of the budget. For $10, $20, you can essentially have products sent out to a person that has around 10,000 followers and get them to talk about that particular product. And in some cases, if you have a really quite expensive product, you just send it out for free. We've actually worked with luxury brands where it's a little bit awkward, but we send out the product and ask for it to come back. So that's something as well that we've had to do in some cases, just because the product's been, $5,000, and to do a seeding program with that's quite difficult. So there's lots of ways of doing it, but product seeding is really, it's really a strong point for brands to drive to e-commerce. And with Little Red Book, you can't link to a store unless you have a Little Red Book store, but you can mention product available on Tmall. So always make sure that there's a direct call to action. And the final one would be influencers, which I've talked about a lot in previous webinars, but they are still probably the strongest way to convert, but be very careful. About 34% of all followers and traffic through key opinion leaders in China is actually fake. So you need to work with an agency that does due diligence, ask brands that have worked with them before, ask for their back-end data for click-through. There's a process to go through before putting a huge investment on it. A key opinion leader. Even celebrities will have, 20, 30% of their followers will not be real. And that's just something, when you look at these numbers, you have to take into account. Yeah, so in terms of, I think, social commerce, I've mentioned it a few times, but they're evolving together. Each of the platforms, Little Red Book, Douyin, they all now have their own stores that don't link to Tmall and JD. These are options that are now viable for brands to look at. And another thing that's great about them is that they can act as these key touch points. As I mentioned before, it takes around 8 times for a particular person to buy a product in China, which is, I think it's 3 to 4 in the West. They'll see a product 3 to 4 times, walk into Kohl's, see it again, and say, oh, well, I've seen this product a few times. It looks great. It's what I'm looking for. Done. Whereas in China, I think there's uncertainty around particular types of categories, right? Where people are not sure about, for example, muesli or a new type of honey that's not Manuka or different things like that, where they really need more of a push to really get into actually buying the product. And internet word of mouth is the best. That's why I think seeding, if we go back to this slide, has really done so well, because it still is now the most authentic. Although I wouldn't say it's authentic, it's just another way of doing marketing. You're essentially telling people to say all positive things about your brand, but it is the more authentic way from the consumer's perspective of you being able to bring across your brand story, right? Instead of kind of publicizing it through promotional tools and advertising. So when looking at, I think the number one thing that brands do when they're looking at setting up their own store is, okay, I'm setting up my store, and then what media do I need to have that connects to it? If you're setting up a mini program, you need a WeChat account, and don't bother with any other platform. There's just no point doing it. Maybe do some seeding on Little Red Book, just because people do often look at this platform. But then again, you have to make it very clear that you are on a mini program within WeChat, and that's quite difficult. So what we would suggest is doing seeding, live streaming, working with KOLs in the mini program, inside the WeChat ecosystem. Also, we've done more and more mini program ads. So Moments advertising is a big no for China. I wouldn't suggest any brand, unless they have $1 million budget, to do Moments advertising. It just doesn't work. It's very expensive, and you won't really gain much in terms of sales. Now, mini program ads is a new format. It's been around for a while, but they've changed the format of how it's done a number of times. It has a lower investment each time. You don't have to do a 50,000 RMB campaign, so a $10,000 campaign every time you want to run an ad. and they have a CPC, a cost per click model. So essentially, your mini program will be advertised under other mini programs that will be allowing you to use their space that could be related to you, but a different category. And it only takes budget away from your account every time someone clicks on it. All the other times, you're just getting free advertising. And the cost per click is half an RMB. The other beauty of that is that once you click on a mini program, you essentially become a follower, or it sticks into your data. So if you're wanting to increase your mini program followers and potential shoppers, I would recommend that as being the best way. Own media, if you have a mini program, is something that you should do. You should have a WeChat account. You should post regularly about the products. You know, there needs to be validation there. With regards to other platforms, own media is a long journey. And you need to understand, you know, if I'm posting this type of content, where is it leading to, what is it for, and what is the purpose? And you don't need own media on all of them platforms. I would choose 2, and the rest would be your paid media, your KOLs, your seeding, that really will drive that traffic to the stores. Yeah.
Right, I've been slowing you down with all my questions. We've only got about 7 minutes left in the webinar. I've just got a few questions to get through. So I just wanted to let you know about that's where we were up to in terms of timing.
Okay, sorry, I always I always run over time, so I'll quickly run through this. I think I've already touched on a lot of these points in the beginning, so be careful that not all platforms can link to e-commerce stores. I think everyone's aware that, you know, Alibaba, Baidu, and Tencent hate each other, so you can't search through Baidu to get products on Alibaba. You can't go through WeChat to buy products on Alibaba platforms like Tmall, and vice versa. They don't get along. So that's something you need to be aware of. You need to make sure that all of your media spend, all of your whatever you're doing to support your online store is within the right ecosystem. Douyin can connect, but as we've just seen, they've increased their commissions to 15%. So this is something where you can't always rely on other platforms. You need to be aware of in-app marketing. And websites. My view on websites, don't build one. Unless you're in services, insurance, B2B, manufacturing, education, these types of industries, you definitely need one. Healthcare, that's where most of the search runs for Chinese consumers. But because of the fallout with Alibaba and Baidu, majority of Chinese consumers, when they're looking at FMCG, mother and baby, and all these other products, they search through the e-commerce platforms, because that's where all the information is provided. That's where all the reviews are. Or they go through Little Red Book if they're mothers, for example, or if they're looking at cosmetics. So websites, I would save the budget and not use it unless you're in the categories I just mentioned. Website marketing.
What about the case of companies who are interested in going over to a virtual trade show, haven't had much experience in China, are not known there yet? Is it good to invest in a China visible website just so that people that you meet as part of the online trade show know that you're solid and that you're respectable?
I guess yes. I mean, backtracking on what I just said, if you're looking for a distributor, you know, you want to have something where you can show them your capabilities, that you're solid business in Australia. I think yes, for that it's important, right? But you could always, I think that the first thing is to check if your website loads in China. Some manage to get through the firewall. We have brands that, you know, their website in Australia works perfectly here, just due to the way it was coded. So I think that's the first thing. If you have any friends in China, I'm happy to help someone out. I can just click on it and see if it loads here. That's the first part, because if not, you've got a huge investment of putting that in place. I think for trade shows, I mean, it's the same in China. I don't even use business cards anymore. People add each other through WeChat. So I think having, connecting with your kind of your online, offline trade shows, having your QR code there for your brand, having links within that welcome message that can help the particular person then go through to a real person where they can have conversations as well, especially with trade shows, because it's not consumer focused necessarily. You want to build up a consumer following so that when you launch your brand, it's already there. I think, if you're going to be doing trade shows or even investing in any of them, the most important thing is to capture as much as you can, both of consumers and of potential distributors that you could work with. So the WeChat QR code is really the way to go. In terms of everything we do in business in China, WeChat's really the way forward. So I think that's the most important thing for brands. Yeah. And then in terms of just wrapping up what I've been going through, Penfolds is an example that's been put together. I think with them, obviously, they have a very large budget. So they're across all these different online channels and all of the social media. What I say for other brands that maybe don't have such a large budget is as many outlets as possible that's on media, but one e-commerce platform. Start with one, grow that platform, and then you can always extend to JD or Tmall or vice versa, whichever one you choose first the year after. Use the internet marketing, grow the brand, find out which one is the best for your category. And I think that's really where, you need to start. When we put as many outlets as possible, that means you need to start putting pieces of information, pieces of PR on different platforms where consumers might come across your brand, or if they do a search, there's something there. Going back to the website thing as a last note, we spend a lot of our time in SEO and SEM actually demoting articles that are maybe negative or bringing up articles that are positive rather than pushing websites, because people might, for example, search through Baidu to see some background on the brand itself, especially your distributors. So that's another thing. I would do a good search on Baidu around your brand before trade shows, just to check that there's links there that are quite negative around your brand, which, it might be something that happened in Australia that's then come across to China, or it might be a case of they're just not even true. And you can demote them as well. So that will help you in terms of finding distributors and partners that you might want to work with at a trade show. Yeah. And I think that's mostly it from my side. So obviously we're a full service agency. We focus on China. We help brands with all of these different types of services. Would love to help any brands that are interested in coming to China through e-commerce. Thank you very much.
Right. Well, thank you, Ryan. I mean, I think what I really took away from that was, although it's a very complicated digital landscape, you can make it work for your particular circumstances, which is great. So there's just two questions that I'd like to fit in, quite different ones. The first is someone's asked about the Chinese government increased taxes on daigou goods, and the question is what categories are still worth doing in light of those taxes that now need to be paid. And the second question was a very general one, but it might be of interest to quite a few people online. What overall, what are the risks? For example, if you were an exporter looking at selling into the Chinese market for the first time through e-commerce channels, what are the risks that you face in doing that? So I'll just leave it at those two questions for now.
So I'll go with the risks one first, as I think it's quite a broad but important topic. Trademarks. I know everyone hates to hear that word. China is a first to file country. You need a trademark to sell through cross-border now, to a particular extent. For some platforms, other platforms are now bringing that in place. If you don't have your trademark, this is something we can help you register, then you might have to rebrand completely for this market. And I think brands think, oh, well, I'm going to China in 3 years. I'm not going to register my trademark. I'll do it when I'm ready. But then it's already gone, and you don't have the opportunity to come in under the brand name that you've built in Australia. So I think that's definitely the first thing. The other option is you can, without a Chinese trademark, sell cross-border on some platforms. The risk would be that if you then do all this marketing around that brand, you're going to lose your trademark pretty quick. Someone will register it. whether it be your distributor, whether it be your competitors. We've seen more and more competitors. So actually brands from other countries, not from China, registering their competitors' trademark to bar them from entry, which is quite a dirty game, but we've come across that more and more. So I think that's the major thing. The other risks are that the product doesn't really match the market, and that there are investment costs that are needed. So I think doing some testing for market is important. That being said, I don't think it needs to be a $50,000 consumer project. There's very easy ways, as I mentioned before, to go online and see if your category is selling, and then do some simple testing with Chinese consumers to see how they react to it. That doesn't need to be a big budget, but I think be prepared. You'll very quickly realize that, for example, that your product's selling based on the investment on in-app and how much sales you get. And I think the final risk is the third parties, the agencies, can be expensive. So do your homework. Go out to 3 or 4. Check the pricing. I mean, we see TPs that are charging $30,000 a month to run a store, and it's very expensive. That money you need to make sure is used for your marketing. They will run your store, and they need to do it well. They need to have full-time customer service, but they also need to ensure that they have enough spend for in-app marketing. And the final risk would be negative reviews. So be careful with that. You'll find that competitors will pay people to write negative comments potentially in your products. It doesn't happen too much, usually with much, much bigger brands, but we have come across that before. Just look out for this kind of behavior, I think, in the beginning, and just be mindful of what's happening on your store. If things start to take a negative turn, then work with your TP, figure out why, and get it fixed as quickly as possible. The Daigo, I'm not sure on the particular tax rates. With the larger Daigo, so that would be working with an actual Daigo distributor that takes large amounts of your product in Australia, they are having issues because they're sending huge commercial quantities of product, and therefore they have problems. But we're still working with brands on a smaller personal sale or individual parcel where you might have 5 or 6 tags. And for the majority of categories, we haven't had any issues with tax. I need to double check on that one, I think, to see which ones have been mostly affected, but we're now doing it with, we're doing a program with TIQ where we're bringing up, I think, 50 brands, and none of them have had issues with direct selling into the market in terms of tax. And that's across nutritional health, food and beverage, and cosmetics.
Okay, great. Well, look, Ryan, we will have to leave it there because we do try to finish on time. Thank you so much for that presentation. There's just so much to learn about this area, but you've really presented it in ways which makes it very digestible. If you're okay, we will also send around to participants your presentation so that they can look at it at leisure. But thank you, Redfern Digital, and also thank you to the New South Wales Government, to Global New South Wales. We will send around information about the new Going Global program, so if that's right for you, do please put up your hand for that. Sorry for those whose questions we couldn't get round to. We will try to get Redfern to answer them for you. But thank you once again for joining the webinar, and I wish you a good afternoon. Thank you.
Thank you, everyone.